Ferrari prices continue to drift lower after they came down from their market top. But the differences between the models are large and range from 2% depreciation to 10%. Welcome to the semi-annual V12 Ferrari market update. In this video we'll cover the latest price developments in the 599, F12, A12, FF and GTC for Lusso markets, compare them to the rest of the market, and deduce what this means for you as a buyer. The 550 and 570M will be added in the next market update, and I'll also do my best to add some developments for the German market. In this video we'll only cover the US market. Starting with the 599 GTB automatics, we can see that prices have been relatively stable since the summer of 2022. That's then also when the market in general topped. Contrary to most other markets, 599 values didn't plummet back to where they came from. Compared to last year, prices are down by 4.7% or $9.4 thousand. The 599 market is relatively small, and this causes a high uncertainty in the trend. Yet, a more detailed analysis confirms the trend. If we break the price down by mileage categories, we can see that prices for cars above 13,000 miles drifted down, and that cars with less mileage are up a bit. But all of these numbers are before any inflation correction. If we go back to the high-level trend and adjust the numbers for inflation, we can see that prices in October 2023 are still 25% above the ones of October 2020. Quite a good result. If we then quickly look at the GTO, we can see that prices have been fluctuating between roughly $850,000 and $1.1 million. And this is a small market, so the uncertainty in this trend is high. Auction sales sit a tad lower and vary between $750,000 and $1.1 million. Let's continue now with the F12 Berlinetta, one of my personal favorites. We can see a price trend that is similar to the 599. A big increase, a top in the summer of 2022 and a small decline. Compared to last year, values are down by 4% or $11.4 thousand. Again, we can see some volatility in the absolute price points, but from the confidence interval, we can deduce that prices are drifting down slowly, not plummeting like we've seen in some other markets. Prices sit between $266,000 and $293 thousand, and this is in line with recent US auction results. Moving on to the TDF, we can see that there isn't much change. Recently a car was listed under $1 million, but overall prices are fairly stable, with $1.2 to $1.3 million as the bottom. Also, this is in line with recent auction results, and the same goes for the market top. A few examples recently auctioned for $1.5 to $1.6 million, which is in line with the market top. Now the situation is completely different in the A12 market. Prices are falling rapidly over there. Let's have a look. The price trend looks nothing like the ones that we saw before. We can see that prices have been falling rapidly since mid-2022. Translating this to depreciation rates, we can see that the Superfast is down by 9.8% and the GTS by 12.7%. In monetary terms, these rates amount to $40,000 and $87.5 thousand respectively. Crazy numbers. Now what's also interesting about this market is the small confidence intervals. Price uncertainty is low over here. A bottom formation does then also seem far away. And this is further reinforced by the time it takes to sell one of these cars. But more about that later. We'll continue now with the 4-seaters. I bet many of you, including myself, have been looking at those prices only to get discouraged by the potential maintenance costs. Depreciation was namely relatively low. Starting with the FF, we can see a price pattern that we didn't observe before in this video, but is in fact very highly correlated to the rest of the market. A big surge up until the summer of 2022, a clear top and a big decline, followed by a relatively flat price development. It's then also this flat development during the last 9 to 6 months that is responsible for the lower yearly depreciation rate of 5.1% or $7.7 thousand. This is only a small amount compared to the $26,000 loss in the second half of 2022. So is this a full market bottom? Most likely not. You can see from the confidence interval that a continuation of the downward drift isn't unlikely. However, nothing points towards a massive drop like we saw before. The next few months will be crucial for the FF. Will they stabilize around $145,000 or will we see them sliding towards $130,000? Continuing with the V12 Lussos, we observe a similar pattern, a decrease followed by a relatively flat price development. Compared to last year, prices are down by 3.2% or $7,900. There are some fluctuations in the trend, but it's evident that the depreciation rate decreased during 2023. Now technically this is a V12 market update, right? But it would be a shame to skip the V8. Things are a bit different in this segment. We can see that prices decreased by 7.2% or $17,400 during last year. In line with the V12 market though, we can see a flattening of the curve in the last 6 months. It's the period prior to that increased the depreciation rate. Alright, we covered a lot of numbers, so let's put all of them in one overview and draw some comparisons. Over here we have now the different models on the horizontal axis and last year's price change on the vertical axis. And this reveals that the average depreciation rate was 6.5%, but also that this number doesn't tell us much. The A12 is the latest addition to the range, so it's natural that these lost a lot more than the older models. The FF, 599, F12 and Lusso lost between 3 and 5%. There is of course some uncertainty in these numbers, so I wouldn't put too much emphasis on these differences. One thing you possibly do want to put some emphasis on is the comparison of the depreciation rates to the rest of the market. If we compare the depreciation rates of the V12 Ferraris to other cars, we can see namely that the older cars did exceptionally well. Over here we have the US year-over-year price changes for almost all cars that feature on my channel. On the horizontal axis we have the price change compared to last year in percentages, and on the vertical axis we have the number of cars to which this change applies. The average decrease during last year was 8%, and most cars lost between 13 and 4%. So this means that the older V12s lost considerably less than the market average. We just saw that values for the FF, 599, F12 and V12 Lussos are down by 3 to 5%. The A12s on the other hand lost slightly more than the average. However, the average decrease is comprised of both new and old cars, and it's only natural that the older cars fall on the right hand side of the average and the new cars on the left hand side. Yet, we saw in last week's GT market update that there are exceptions, such as the California. Also the A12 result is good. The depreciation rate is for example much lower than for a Roma. Now if we place all of these results back in the long-term market context, it's of course key to know that prices surged during the pandemic, topped mid-2022 and then decreased with above average rates. Only a handful of markets remained stable after they topped. Think about all GT3s and 360s. It was only in the beginning of the summer of 2023 that we saw that the depreciation rates in some markets started to decrease to more normal values. The market for old V12s, however, saw a slightly stronger flattening, resulting in a lower depreciation rate. Prices for the A12 on the other hand didn't flatten. They continued to fall almost linearly, something that we can see for many new cars. Now so far we mainly looked backwards. We investigated the price changes during last year, but most likely it's the price change during next year that you really want to know. Will the flattening continue or can we expect a new drop? We can only speculate about this. I don't have an evidence-based model that can accurately predict the prices. What we can do though is look at some early warning indicators in the inventory data. Starting with the two-seaters, we can see that the percentage of unsold cars increased drastically in all markets when prices fell after the market top of 2022. At one point, 71% of the 599s were listed for sale for longer than 3 months. Since 2023 though, we can see a slight stabilization in the unsold rate. F12 sit between 40 and 50% and A12s hovered slightly lower. The rate in the 599 market even decreased drastically to 29% in January. This stability and decrease, of course, helps to support prices. A strong increase could point towards an acceleration in the depreciation rates. If we look then at the price changes for these unsold cars, we can see that unsold A12s got discounted by 6% during the winter of 2023, and that this discount rate is now lowered by 2 percentage points. This is a small sign that the market is a bit stronger than 1 year ago. Discount rates for the 599 and F12 have a much higher uncertainty due to the small market size, but in the grand scheme of things, they remained relatively stable during last year. Now if we repeat the analysis for the 4-seaters, we can see more volatility on the percentage of cars that aren't sold within 3 months. The trend for the FF seems relatively flat, while the rate for the Lusso is slightly elevated compared to 2022. Looking at the discounts for unsold cars, we can see that there's a decrease compared to last year, when cars that were for sale for longer than 3 months were discounted by 8% during the winter. Now we are looking at 0% for the Lussos and minus 4% for the FFs. Now, summing up the developments in the inventory data that we just saw, we can say that the unsold rate developed relatively flat during 2023 and that discount rates decreased marginally. All in all, nothing that indicates a severe increase in depreciation rates. Let's wrap up and conclude. V12 Ferraris are drifting lower, but the depreciation rates for the older models are much lower than the market average. The A12s are losing more, but are not depreciating excessively quickly for a brand new car. So what does all of this mean for you as a value-conscious buyer? Should you get that V12? Well, it's hard to put value-conscious and V12 Ferrari in the same sentence. Maintenance costs can really pile up. Looking at the depreciation rates though, current rates are only to some extent predictive of future rates, but at the moment, both the current rates and the inventory data do not contain any developments that would point towards a big increase in depreciation. Of course, if there are any big changes in depreciation rates, you'll hear about them first on this channel. So make sure that you subscribe to stay up to date on the latest developments in the car market. Last week I, for example, covered the Romas and the Californias in the front engine GT market update, and you can check out that video by clicking right over here. As always, thank you for watching, and I hope to see you next week for a new video.